Well, gas prices hitting their highest level in 4 years as a record number of Americans get ready to hit the road for the 4th of July holiday. So when will higher gas prices start to actually hurt the broader economy? PwC Partner Mitch Roschelle is with us. Good morning, Mitch.
Good morning, Cheryl.
That is a big question, you know. I mean, we've seen domestic production for crude in the U.S. increase. We're at 10.3 million barrels per day now, but still we're seeing oil moving higher and we're seeing gas prices moving higher.
Yeah, so 10 years ago we were only at 5 billion barrels a day. So,
yeah.
so that's a tongue twister. So, that is a good news, but we consume about 20. So we're still reliant on foreign oil. The reality is we can't really afford long term to be dependent on foreign oil. So we're trying to get our domestic production up. But this is going to be a drain on the economy if we're up 70 cents year over year in the gasoline price.
And the Wall Street Journal points out that every 1 penny, 1 cent reduction in gas prices puts more than $1 billion a year into consumers' hands. So if it's the reverse effect and we see oil to continue to rise and gas prices continue to rise, every penny really makes a difference here, Mitch.
Right. And think about that. That's a $70 billion drag on the economy. And think about consumers got all this benefit from tax reform, and now that's going to get unwound by a $70 billion tax on the economy in the form of higher gas prices.
Yeah, that's interesting. Also, let's talk about kind of the politics of all of this, because the president actually tweeted about his role and, of course, that relationship with King Salman. Look at this tweet from President Trump, and this certainly has moved the oil market. This tweet, he said, I just spoke to King Salman of Saudi Arabia. I explained to him that because of the turmoil and dysfunction in Iran and Venezuela, I'm asking that Saudi increase oil production, maybe up to 2 million barrels to make up the difference. Price is too high. He has agreed. Now, that Trump tweet was from June 30th. But again, playing politics, he's trying to save the U.S. consumer and the economy. I don't think it's really made a difference thus far.
No, it doesn't look like it's driven down prices at the pump. But the reality is also Canada apparently has some production declines. You've got Iran, you've got Venezuela, you've got Canada. So Saudi Arabia and the OPEC nations are going to have to produce a lot more oil to get those prices down to where they were just a year ago.
It's always a double-edged sword when we talk about gas prices and its effect on the economy and on the stock market, because, it's good for some businesses. Think energy companies, think your Chevron, your ExxonMobil, your Occidental. But at the same, it's good for some of those workers. But then on the other hand, it hurts the consumer and could have that negative effect on the economy. Where do you think we're at right now in kind of that balance that we're trying to find?
The interesting thing about our domestic production, so the offshore production has a long lead time, yet on the other hand, the shale industry has a very short lead time. So there are companies and industries that will benefit. Also, we saw in the first 2 quarters of the year big capex spend, capital expenditures being spent by the oil and gas industry. So that was good, and that was catalytic, hopefully, for the first or second quarter GDP growth. But on the other hand, we do have this drag on the economy because there's this tax in the form of higher gas prices. So yeah, it's a difficult balance. We'll have to see how it plays out throughout the year.
Yeah, because, higher gas prices means it's more expensive to fill up your boat when you go fishing.
I take that personally. I did notice that the gas prices were up considerably year over year, but more than 70 cents, that's for sure.
I thought you would see that. Yeah, exactly. Well, have fun fishing. I'm sure that's what you're going to be up to on the holiday, Mitch.
I will be.
Yeah, thank you for being here, Mitch. It's great to have you as always.
You bet. Thanks.